Next week sees the debut on the local share market of a New Zealand company that's already investing in Uruguay. Tony Field spoke to one of its directors, former Fonterra boss Craig Norgate.
It could pass for a New Zealand farm, but the ponchos and the horses are giveaways. This isn't Southland, it's Uruguay.
It has a similar temperate climate, significant tracts of land that are quite rolling and very suitable to New Zealand style farming. So we find that you can get the same sort of productivity in Uruguay that you experience in New Zealand.
Productivity achieved at far lower cost thanks to cheaper farmland. NZ Farming Systems Uruguay was launched a year ago by PGG Wrightson. It has a 10% stake and manages the South American farms, exporting New Zealand expertise and technology.
The nation's got to move away from exporting goods and focusing on knowledge and intellectual property and also ensuring that we're overseas investors rather than net borrowers internationally.
Business commentator Rod Oram says it's a strategy Fonterra and the entire farming sector is considering as well, whether to become a global player rather than just an exporter.
It's only going to work where New Zealand has large scale in global terms and or particular expertise. It's not a model that would necessarily work for everybody.
Norgate expects world dairy prices to ease, but says that will be offset by rising demand for dairy products, especially in Asia and the developing world. The company lists on the share market next week, and PGG Wrightson is also looking at expanding into Brazil, Chile and Argentina. Tony Field,